More and more data continues to pile up, showing how weak the economy has been throughout this period of time. It highlights the underlying problems which are seen by those who wish to know what's actually happening. In 2020, there have been many store closures that are shaping up to be the highest in history. This will put more people out of work and a further burden on the social assistance programs. This needs to be documented. You came here for the truth, so let me unveil that for you. Today, we're going to talk about the economic recovery that isn't happening. We're going to show you exactly all of the details that you need to see. We're talking about store closures. We're talking about businesses that are eradicated. We're talking about industries that are changing. I am going to get into the details of that. I'm also going to cover what's happening in the stock market. I've got a lot of information to get into today, so let's begin. Yelp says more than half of restaurants temporarily closed are now permanently shuttered. This is really important. I'm going to show you the information directly from their site. This reminds me of what we are seeing all throughout the period when, with the open table data, I've given you that. I've shown you others that I call second or third tier indicators that I believe are very important, not because it's Yelp, not because it's open table, but because we're piecing that all together. If you look at one statistic, it's never going to give you the whole picture. That's why you need to start looking at all these different sources. We get government sources, we get white papers, we get data that's coming from here or there. I'm looking in the comments section. You know how many times I have been able to verify information that I have shown or that I have talked about just by looking in the comment section? There is a wealth of information in there. Definitely continue to post your comments. Oftentimes I see hundreds and hundreds and hundreds of comments, and so many of them are actually verifying or quite the opposite in some cases, and that's good. We need this information. We need to share it, and that goes for any country, in any city. Doesn't matter where you are. Share the information. That's how we learn. Many sources are key. This is the report directly from Yelp's website, and essentially we're looking at this chart down here. The share of permanently closed businesses is rising, and if you're looking at that gray area, essentially that is the temporary closures, and this area is the permanent closures, and you could see over time it has been increasing. For those who can't see the numbers, I know they're small. March 10th is where the chart begins, and of course we have up until July, and that just gives you a broad range of what's been happening, at least as it goes for the Yelp data. Essentially, the point I'm trying to make is that as time has been going on, there have been more and more stores permanently closing. This isn't quote unquote temporary closures as we have seen so many times before. Oh, don't worry, it's all temporary, it's all temporary. Well, not for these companies here. They give you the numbers in this paragraph. All I wanted to highlight was this is inevitable. We've been talking about this for a while. You and I know exactly what's going on. There might be naysayers out there. It doesn't really matter. Ultimately, we have seen time and time again how the economic data has been piling up. Look, 2019 wasn't good. It was good for the stock market, but it certainly was not good for the economy. And now we are starting to see permanent effects where maybe they were just getting by, just barely getting by, and now something comes around, takes them off their feet for a couple months. That's it. End of story. The stores are closing. This means that you're going to have businesses that are carrying massive amounts of debt. Are they going to claim bankruptcy? What happens with them? But of course, we have the job scenario that is really key to understand. So many people are losing their jobs right now, and that's not temporary, that is permanent. As debt climbs to a record $27 trillion, Congress says it's not the time to turn off stimulus spending. Now is not the time to turn off the faucet when, we should be using our strong balance sheet, not sure what they're talking about, to borrow to stimulate the economy. Already they have pumped more money into the system in this short period than they ever have in all of history. They have magnified the problem so dramatically, and yet we keep seeing information like this. It's unbelievable. You've got debt at a level. It can never be paid back. This debt will not be paid back. The interest payments on the debt are becoming unpayable. That's how big they are. Just the interest payments. And this is a very small number right now. As you see, interest rates clearly are falling. It's still a heavy burden. Even if they bring them to the negative, there's still an issue that we have here. And this is on all levels. You look at what people are in, corporations, everybody, and doing what they're doing here with the Federal Reserve is the root cause of all of these problems. Why do they get into debt? Because they know the debt is so cheap. And of course, if they'll be bailed out by the lender of last resort, why not? McConnell says economy needs another shot of adrenaline, backs additional round of stimulus checks. You might think this is a good thing. Doesn't really matter in terms of opinion, but look, $1,200, it's not going to do anything for people. Sure, in the short term, it's going to help them out, but that's not what they need. They need a job. They need to be working. They need to provide for themselves. $1,200, even if they added another $1,200 on top of that, look, in this period of time, you're getting $2,400. That's going to be able to give people some food, pay their bills, pay some of their debt, whatever that might be, but it's not going to resolve their issue. The Federal Reserve right now is printing money out of thin air, and they're buying junk bonds. That's devaluing your currency, making this $1,200 and potentially this $1,200 less valuable. I don't think people have ever acknowledged that. When you look at the news, when you look at the financial media, those in the industry, they're doing that shady business behind the scene, and it's making this a whole lot more worthless. And that right there is something that needs to be understood. If the money had actual value, if it wasn't inflating at this massive level, it's being hidden from the public because you look at the inflation rate and my goodness, it's a joke. There wouldn't be so much requirement for stimulus. It's just ridiculous. But anyway, I can go on forever. Insiders who nailed the market bottom are starting to sell stocks. Wait a minute, hold on. Is it possible that you can actually sell a stock? I didn't know that. Everybody just buys in as the companies go bankrupt. Well, then we have more and more people actually purchasing them. It's the most ridiculous thing I've ever seen in my life. But why in the world would somebody sell? This must be fake news. Sell to buy ratio jumps to the highest level since 2017, ratio nearing levels that have tended to mark market tops. If you see what's happening, I'll show you in just a second. We are disconnected from so many different fundamentals right now, even as it relates to these financial markets. I'm not talking about what you think the value of Amazon is or Uber or Beyond Meat or whatever. I'll get more into that in just a second. Okay, take a look. As US stocks climb to their most expensive levels in 2 decades, the executives in charge of the companies benefiting from the rally are showing signs of anxiety. Corporate insiders whose buying correctly signaled the bottom in March are now mostly sellers. Almost 1,000 corporate executives and officers have unloaded shares of their own companies this month, outpacing insider buying by a ratio of 5-1. Only twice in the past 3 decades has the sell-buy ratio been higher than now. Of course, this could be part of a process where they are required to sell shares at a certain time. That's understood. That happens regularly. It's part of their compensation, of the way that a lot of these people make their salaries. I get that. But the number, that 200% level, is a key. Our indicator is now flashing a warning sign. I'm not prepared to say everybody should sell everything and short the market because of the recent insider data. The way I'm using it is I'm more comfortable selling some of my winners. We still don't trust the market's recent recovery. And essentially, it makes a lot of sense. They are just looking at how much they have gained over the last little while. They're taking some off the top. They don't like the rally necessarily because they are looking at the economy. It's very weak. So they basically are just trimming the fat a bit, let's say. Here's a chart that is associated with that. Buyers turn sellers. Company executives step up selling as the S&P 500 rallies on. This is actually more aggressive with the NASDAQ. But anyway, you could see it on the chart going back to 2014. Take a look at the comparison between the extremes of the stock market, which is the NASDAQ right now, and bonds, specifically the 10-year yield. I mean, it is just ridiculous. From the bottoms in March, where bonds have basically been around this level where you could see their worthlessness, stocks have accelerated dramatically. There's always going to be winners and losers. There's always going to be certain assets that perform better than others, but the disconnect in between these two is truly unusual. Ever lower US bond yields are driving gold's relentless rally. This comes out of Bloomberg. Deepening negative yields in the US Treasury markets are fueling a frenetic rally in gold that's boosting the precious metal towards a record. Believe it or not, gold 22% increase this year, and you will never hear a financial analyst talk about it. You will never hear a financial planner talking about this either. And yet, look at the gains they have seen so far. And that's, of course, we're looking at, the paper metals. Physical is a whole different ballgame altogether. But still, it shows you that despite all of the manipulation, there still can be a rise. And right now, the last time I checked, it was heading quite close to the 1900 mark. I think it was somewhere around 1860. But regardless, this just shows you that it has been increasing quite predictably as we have seen the devaluation of the currencies, the central banks around the world purposely trying to devalue their currencies as fast as possible. And as a result, there has been a lot of money fleeing into gold. Gold is a superior form of purchasing power protection, and as real rates dive significantly below zero here, gold is relatively more attractive as a hedge. If you want to know my opinions on precious metals, gold specifically, I have a video that is located in my e-course, which you can see if you go to my channel, scroll down, look in the playlists, it's there, or you can just type into a search the money GPS gold. And I did one earlier in the year, I believe, that really breaks it down. You can see what's been happening with FANG stocks over the past few trading days. This has come down. I do believe that Amazon stock, which went down several days in a row, has been impacting this. But I mean, you just take it back a few months and see how incredible the rise of these FANG stocks have been. In fact, all the tech stocks. United CEO expects airfare to drop, revenue to plateau at 50% of 2019 levels. All of these different airlines, the manufacturers of these airplanes, you're looking at so many industries surrounding this, tourism and everything else that will be significantly impacted by what we're seeing here in 2020. They expected that to be okay by now, but of course that narrative is long gone. It's going to be a more slow and steady rise, and many have predicted that to get back to those 2019 numbers may take a lot longer than what they think it will be. Last but not least, you don't have to worry about going outside. You don't have to worry about communication with other humans because robots are going to do the job. That's what's happening here. More robots, more automation. In this case, Amazon expands robot package delivery system to more cities. Amazon is one company in particular that uses a lot of robots. If you haven't seen their warehouse, their fulfillment centers, and how they operate, it is just amazing with the technology that's being used here. Now, of course, a lot of jobs have gone into the technology of building it and programming it and so on, but there are a lot of people that work in these fulfillment centers that do the delivery work, that are driving the Ubers, that aren't programmers, they don't have any knowledge about building robotics and everything else, AI and all of this business. And in the short term, because of the rapid adoption of all of these different automated new processes and physical hardware like this, they're going to be out of work, and that's just the way it is. That's what's happening here. The trend is accelerated right now in 2020. I'm keeping my eye on it. I'll keep you up to date. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you hate this video, definitely give me a thumbs down. I really appreciate that too. If you want to check me out on Instagram and Twitter, you can do so at the Janet Yellen GPS. If you want to learn how to sell stuff online, I'm talking about e-commerce, the whole thing, top to bottom. You can go elsewhere. There are courses out there, $1,000 plus. Be my guest. A lot of them are actually quite good. Or you can learn for free at the AmazonGPS.com. Do you want to understand the financial system from top to bottom, A to Z? This is the place. In these two books, I teach you everything you need to know. I explain it without the jargon. I teach you very simply. Take a look at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. This is a really good video. Got a lot of data in here for you. Click it. I will see you there.